Alrighty, good afternoon, everyone. Happy Monday, January 22nd, and welcome to the Flip Trade Complimentary Showcase. So excited to have you all here because the Flip Trade 3-day event starts tomorrow. It's going to be the first ever Flip Trade 3-day event that I'm doing. So very excited for this. Based on your feedback, I've incorporated a lot of new content based on your suggestions as far as some of you guys like to look at the smaller time frames, do more active income trading. Some of you like to look on the higher time frames. So I'm trying to make it where everyone is going to benefit from this course. Overall, the main purpose is that I want to simplify trading and how we read the price charts. My opinion and how I've, come into trading is that it's been way too complicated as far as indicators, odds enhancers, different things that and strategies that students have to learn, but ultimately are still confused at the end of the day and struggling with their trading. So I wanted to create a course that strips away those indicators, those odds enhancers, and focuses primarily on price action. When we can understand how to read the price charts and locate where the buyers and sellers are at, we can find those high probability entry points. So very excited for this. Just wanted to show you a screenshot from today's live trading session for those of you who weren't there, and a great trade that we took on the Dow contract. So markets have been moving up. We want to take advantage of those long running moves. It's important to know exactly what to look for in order to splice into some of these market moving trades that we're looking for. So as the markets are moving higher, we're looking for the one and only 2-candle flip trade. We're able to identify that as we drop down to a smaller time frame, and that allowed us a way to splice in to that trade opportunity. The point in the screenshot was up about $285, so a nice way to end our live trading session. So that was today's trade. One from Friday, you may have seen this in some of the advertising, but another 2-candle flip long trade that worked out to the upside, and then also taking it back to the downside. Now, when I mentioned the 2-candle flip zone or 2-candle flip trade, it's a very specific group of candles that I've come to the conclusion gives us the most probability of looking for a change of direction. We want to get into trades at the origin of those turning points, and often what we find at key turning points in the markets is the 2-candle flip zone. So I'm going to go into more detail on exactly what that criteria is later in the showcase, but just want you to start associating that when we're looking for a long running move to the upside or a long running move to the downside, what starts that transition in that series is a red candle followed by a green candle. Then we get that move to the upside, or if we're looking for short trades, we have a green candle followed by a red candle, long running move to the downside. Now there's several other odds and enhancers that we look at that tie in with the 2-candle flip zone, but this is going to be our foundation for the Flip Trade 3-day event. Here's another one from January 12th. This one we were in for a couple days and looking for that long trade setup over 3,400 on that 2-candle flip zone. And then another one that I showed last week as we ended our session on Friday, just showing how the content and what I'll be teaching in the 3-day event is going to be very specific with what we look for on the price charts, and then being able to see it implemented in the live markets is going to help you tie all the information together so you can take those trades yourself. Now, you can't simply just trust the content and believe it works, but once you see it implemented and get comfortable using it in the live markets, then you'll be able to see how it really works. Alrighty, so welcome to the Flip Trade Showcase. And the chat is open, so if anyone has questions, we have a little bit smaller group this time around versus the first session. So any questions you guys have, feel free to type them in the chat. Happy to help answer anything you guys have. So welcome to the Flip Trade Showcase. Learn Kate's 2-candle flip, a very specific price pattern to increase your trading opportunities and identify key turning points in the markets. So sometimes people ask me, is this only for stocks? Is it only for futures? The answer is that it applies to everything, because as long as we can understand price patterns and where this 2-candle flip is located, we can look to trade any asset. So stocks, futures, Forex, option strategies can all be implemented when we can understand the two candle flip zone. The two candle flip can be found on all time frames as well. Another very common question, people hear me talk about the two candle flip and they wonder if they can implement it for shorter active income trading and if they can implement it for day swing trading, some longer term trading strategies. And ultimately at the end of the day is that you can implement it for any type of trading strategy, any time frames as well. Ultimately, it boils down to the picture on the price charts. My mission is to increase your confidence and consistency reading the price charts. So overall, that's the goal. Again, I feel from coming into trading, it's been way too complex, too much information out there that a lot of traders ultimately still struggle at the end of the day. A lot of traders that have been doing it for many, many years, some that I've come to meet that have been trading for 10 years, 20 years, and still struggle. So my goal is to change that, to simplify it, and to build your confidence in understanding exactly what to look for. If you have a specific problem in trading or something that you can't quite grasp, that's where this 3-day course is the opportunity for you to come into the session, ask those questions, be very direct, specific, and ultimately boil it down so you can understand the information in a simplified way. All right, so questions for the room, and if you're comfortable answering them, feel free to. If not, just some things that I want you to think about. So question number 1, what is it that you'd like to accomplish in trading that you haven't already? So pretty broad question. What is it that you'd like to accomplish in trading that you haven't already? I'm sure everyone's here for a reason, and that may boil down to something that you're still struggling with, something that you're looking to accomplish, but maybe you're just not quite sure how to get there. So it's question number 1. Question number 2, what are your stumbling blocks? So it could be that you're not sure where your entry point should be at. Maybe you don't have a really good trade plan. Maybe it's simply that you don't understand why and where price changes direction. Any one of those answers or whatever you have, just think about it. And then what is keeping you from achieving your goals? So 3 kind of general questions, but I do want you to think about them. These all tie into trading. Everyone is completely different. But ultimately, whatever your answers are to each of these questions, I want you to let me know ahead of time prior to the class tomorrow so that I can make sure that during our session, I'm focusing in on your questions, where you're struggling, and looking to really make this course about you guys. You know, it's not something I just want to teach and then have you guys take it and run with it, but I really want to tailor it specifically to you guys so you understand why you're trading a certain way, where you're looking on the price charts, and ultimately simplifying it so that you can implement it on your own. All right, so what's the two candle flip zone? Again, a very specific group of candles. When we're looking for long trades, we need a red candle coming down, followed by a green candle closing within the range of the red candle. So again, we're simplifying things. We're not making it too complex. Just look for red and green, and the green candle needs to close inside the range of the red candle. That group of candles is often where we look for our long trade opportunities. Hey, Toby, good to have you here. See, Toby's comment is, I've been trading for about 5 years. I could always learn how to read price charts and particularly price action for better accuracy. Yeah, and that's the thing, you know, trading is a ongoing, you know, learning curve. We're always trying to improve our learning and understanding of the price charts. And, you know, you said it, you know, perfectly. You know, my goal is, you know, there's so much information out there that we want to keep learning, but we also want to be able to implement it in a way that we can understand, we can process, it's simplified, and ultimately we can make it our own. You know, I'm not the type of person that wants you guys to stay with me forever. You know, I want you guys to really take this and run with it and implement it in your own trading. So I want to be transparent with everything, and just making sure that everything that you're looking for, you know, is getting answered during this course and ultimately helping you visualize where and why price changes direction. You know, it does take some time and practice, but ultimately I'm trying to fast track you as much as possible to give you the most important information that I've gathered from my years of experience in in teaching and being able to give it exactly to you guys. So thanks for being here, Toby. All right, so a couple problems that I've heard from many students, and then I have potential reasons, and then ultimately you'll learn the answers during the Flip Trade 3-day event. Some problems, I've just listed 5 here, although there are many out there. Common problem, my zones don't work. Potential reason, I have it here, and then a solution. I'm gonna go to the next slide just to speed it up a bit and kind of show you how this is laid out and how I use this during the 3-day event. So we're all coming into the Flip Trade 3-day event with problems. I'm going to give you a potential reason for why that problem may be occurring, and then the solution will be demonstrated during the 3-day event. So for example, your zones don't work. Well, zones are actually a delayed trading technique. So if we think about it, if we're basing our trades today off of something that happened weeks or months ago, we are completely missing what's happening today, which is just as important, if not actually more important, than what happened weeks ago when that zone, quote unquote, was formed. If we're looking to trade today, we need to know what's going on in the markets today, what's the current trend, are there any economic reports coming out, what is where are we seeing that momentum going? Are we seeing more bullish momentum or more bearish momentum? All of that is very important today versus zones, because a lot of us try to find zones from, days ago, weeks ago. The fact that it's delayed can often cause a negative impact on your trading. So what I found as far as a solution, because I found that zones really didn't work for me when I learned them through another trading school, I needed a more active trade approach. And this is what I learned from someone, that I found it to be a more a smarter way to trade as far as getting in sooner and being able to take advantage of what's going on in the markets today versus caring so much about what happened, weeks ago or months ago. So it's an active trade analysis that we're focusing on that 2-candle flip zone. If it's formed today, if we're looking at a daily chart, if it's formed, just today, then tomorrow I'm looking to go long because I have the 2-candle flip. It's that specific and that exact that whenever we find the 2-candle flip, we know look to go long. We see a 2-candle flip sell zone, look to go short. Now, I have broken it down in the course content for those active income traders. If you look at the hourly charts or 15-minute charts, different sort of strategy that I've created and incorporated. We'll be using the 2-candle flip zone for that as well. But ultimately, we want to take advantage of what's going on today to find those high probability entries. Good question, Michael. When do you enter the trade? So pretty quickly, as soon as you find the 2-candle flip zone. So again, we're not waiting for zones. I know that was a problem back in the day for me, is that I would locate zones and then they would never trigger. I'd be waiting forever for the zones. And then after so many days of them not hitting, you kind of get over it and you get frustrated because you don't know what you're doing wrong. So we'll be entering the trades day after day. So keep that in mind when we start to get comfortable with the 2-candle flip zone. We're going to be looking at the market conditions. We're going to see where is that high probability entry point based on the 2-candle flip. Very active, very immediate as far as what we're looking for. And then we'll bring in some other odds enhancers to determine if that 2-candle flip is going to be a longer running trade or if potentially there's some obstacles in the way. And I'll get into more detail on when we enter the trade once I jump over to the charts. So another problem, I get stopped out frequently at the 9:30 a.m. market open. So reason for this is when most other traders are participating. So banks are participating, institutions are participating, expert traders, novice traders, everyone is most actively involved at the 9:30 Eastern Time market open. So there's a ton of volatility and it can make traders fearful of trading because they don't know what to do with the volatility in the markets. They'd rather stay out and watch and spend many years of their lives just watching the markets, but not really understanding how to participate in them when these moves happen. So I don't want you guys being fearful of the markets. I think I've found that a lot of traders lack confidence and are fearful of the markets because they don't understand where they're going and why. So I want to be that simplified and break it down and say, here's why price did this, here's where the trade would have been, and put those pieces of the puzzle together. So if 9:30 is when most of the other traders are participating, why not, as a solution, get a head start and identify setups at the 6 p.m. Eastern time open? So stocks trading 9:30 to 4, futures market trading is nearly 24 hours. So can anyone tell me when the futures market is closed? Just quiz question for the room to see who knows this. What time is the futures markets closed? Any guesses? If not, this will be on the next screen. Good job, Jerry. Yeah, Pacific time, you believe that? Yeah, that's right. So Eastern time, typically what I go by, 5 p.m. to 6 p.m. Eastern time is that 1 hour when it's closed. Prior to 6 p.m. Eastern time when it reopens, that's when we see a new daily candle form. So keep that in mind. We have 1 hour per day when the futures market is closed before another candle is created to start the new trading day. So during that time, we want to be assessing what's going on with the markets. Do we have any 2-candle flip zones? And how can we participate based on a new daily candle forming? Then we'll come down to the smaller time frames and look for our trade setups based on this higher time frame information. Another problem, I let my losing trades run and take small profits. Potential reason for that is that you don't have a trade plan. Maybe you're still not sure how to read the price charts accurately. So many, honestly, reasons why you may be letting your losing trades run. But I would say that's going to boil down to just not understanding the price charts, because we should have our stops in a very specific place based on what the price charts look like. So the solution, create and follow a simplified step-by-step trade plan. So we need a trade plan. We're going to be kind of going through that together and building a template during the 3-day event to give you sort of those guidelines of what to look for, why we're looking for them, and then you can take that and start to implement it in your day-to-day trading, or starting off in simulated to make sure that you get comfortable with the process. Another problem, my successful trades are short-lived. So if your successes are short-lived, the potential reason is that you're trading against the trend. So if you are in on a long trade, but the overall trend is down, yeah, you're going to be, kind of trading against the overall trend. And it's going to be, stacking the odds against you. We want to be able to stack as many odds in our favor as possible. So in trading with the trend, we can use the 2-candle flip zone, which can give us a gauge of the trend. I mentioned the daily chart is really our foundation for locating trend and finding those key turning points. And that's where from there we'll go down to the smaller time frames to find ways to splice in. One more problem, my breakout trades go against me quickly. This one was me over and over again, and I didn't understand why my breakout trades would go against me quickly. I thought breakout trades were when all the orders were filled and we should get these long-running momentum moves. But for some reason, when I would take breakout trades, it would work for a little bit and then completely flop against me. So a couple potential reasons for this. Unable to identify opposing targets could be one. So we use the 2-candle flip to not only look for where we're going long or going short, we also use it to gauge where our opposing zones are at. So if your breakout trades are going against you, that is what we consider the fake out breakout, where it breaks out and then it quickly reverses against you. So I've created a strategy that we can use to take advantage of that, where if it is a fake out breakout, we want to participate in that reversal, similar to the 2-candle flip zone where we're participating in a reversal of a move, similar to the fake out breakout. So one slide here, just wanted to illustrate sort of the difference between how I'm going to be teaching with the 2-candle flip versus our alternative zone strategy. I'll start with the one on the right. Many of us have traded zones in the past where we isolate a specific group of candles. We wait for price to come to our zones. We place our entry, we place our stop, and then we, more often than not, get stopped out. Very frustrating. Been there time and time again of trying to find zones, different ways of looking at zones, and ultimately they fail. And very frustrating, very nerve-wracking, especially getting into the zones and being not 100% sure if it was going to work or not. So I wanted to switch things around and not teach it this way, but rather when we can identify the 2 candle flips, that is a more active way of trading with the trend. So a zone, as I mentioned before, is a delayed trading technique where this zone happened. Looks like this chart is silver on a daily chart. This quote unquote zone we were looking at was from March 13th to May. So a month and a half ago was when we found our zone. Taking a trade based off a zone that was formed over a month ago, a delayed trading technique, higher probability to fail. We want to trade with the candles step by step, kind of walking through them and following the price patterns. And it all starts with the 2 candle flip zone. So here we're looking at 2 candle flip, micro S&P on a daily chart. Again, this does apply to all time frames. Here we have a red candle coming down. Green candle closes within the range, the high and low of the red candle. And then what happened after was a long running move to the upside. Here's one here, red candle, green candle. Green candle closes within the range of the red candle. Long running move to the upside. So we're being more active and smarter because we're identifying these on a day-to-day basis and participating as the markets are moving in that direction and reversing from more of a downtrend to an uptrend. This one here recently on the S&P where we were in that downtrend, right when we saw that daily 2 candle flip, you should be thinking, all right, how can I look to get in long, as this is likely going to be the turning point in the market. Same thing down here back in December where we were getting a little bit of a pullback and some consolidation. Once we found that 2 candle flip, that triggered the next wave to the upside. So going back to Michael's question before, when do you enter the trade? As a general rule of thumb, we use the wicks to show where any remaining sellers are at when we're looking to go long. So to put into perspective, in this down move, the sellers were clearly in control, which is why price was pushing down. Wasn't really a whole ton of buying, so the sellers were in control. When we get our flip candle, things start to shift and the buyers start to take out the sellers because the sellers initially pushed price all the way down to this low wick, but then the buyers were coming in, pushing price up and taking out the sellers. So once that we have that shift in dynamic between selling pressure to buying, we look for that next wave to the upside. So when we enter the trade, you notice this top wick here. That top wick represents the remaining sellers that are pushing down the market, that's keeping the buyers from moving the markets higher. So as a general rule of thumb, we'll be using the wicks, entering the trade above the wicks. Because once you're there, you're in the clear, market's likely moving to the upside. Same thing down here. Notice that when we cleared that top wick, all the sellers had been eliminated and we saw that next wave to the upside. So no more waiting for zones. We will talk about that a little bit if you do trade zones, but a lot of it is going to be this more active strategy so we can participate in these moves as they're happening versus waiting for zones for days or weeks. And I see Toby had another question. I'm glad to hear, Toby. Let's see, Kate, I'm not sure if you want to look at specific opportunities. Absolutely, we'll do it. So please feel free. Please feel no obligation, but I'm currently looking at a 2 candle condition on a 15-minute Bitcoin. Take a look at it. It looks like a possible long entrance, particularly since today's drop has now closed the gap from December 4th, 2023. Is this a legitimate candidate for your strategy? Why or why not? Yeah, let's jump out to a chart. Why not? Alrighty, so we're looking at Bitcoin. And we're on a 15-minute time frame. Okay. Looks like a possible long entrance particularly since today's drop has now closed the gap from December 4th. All right, I like it. Okay, so we've got a 2-candle flip, red and green candle. How we'll isolate it is from the close of the green candle to the low of the red candle. Now, to be comfortable trading the smaller time frames, what I'm going to be kind of going into more detail is what we're seeing on the higher time frames. Because just looking at this chart right now, I don't want to be picking a bottom necessarily. And there's a specific location that we'll want to look for the 2-candle flips. Now we're going to find them everywhere. You're going to start looking at charts and seeing so many 2-candle flips and not knowing which ones to take. That's why we got to be very specific with our criteria. Typically, I'll look at the daily chart as my starting point to see what's going on. All right, so we have been in an uptrend. Now we're kind of pulling back a little bit. Slightly more of a downtrend. Looking for potentially a long trade. So I'd say it's a little too soon to be overly bullish, but I see what you're seeing is how we filled that gap to the downside. One thing that we're going to be doing to walk you through the process of whether to take a long trade or a short trade is to identify what has happened up till we've gotten to today's price pattern. So if you notice, leading up till what's going on today, we had this downward move. At the last sort of bounce before the breakout, notice here we have a 2-candle flip to the downside. Green candle, red candle. Based on kind of our base foundation, we'll look to go short below that low wick. So even before we go down to a 4-hour, 1-hour, 15-minute, if you just look at a daily chart and you can say, I'm going to go short below that low, by the end of the day, you made a pretty decent profit on Bitcoin futures. Conversely, if you're looking for long trade setups, maybe a couple weeks ago, you saw this red candle, green candle. We have a 2-candle flip there, and that was the origin of this pullback move that led to the next wave to the upside. So we have long trades, we have short trade setups. Coming back even further, let's see. Ooh. Coming back over here. How about this one? Red candle, green candle, wave to the upside. And then after that pullback, red and green, wave to the upside. This one down here, red, green, wave to the upside. This one, let's see, did it close within the range of the red candle? That one was slightly above. Yeah, not quite a 2-candle flip there, but we can see 2-candle flip, upward move, 2-candle flip, upward move. And it's going to, during the 3-day event, we got to be specific with where we're looking for the 2-candle flips and identifying trend in the location of the 2-candle flip zones. There can be several different odds enhancers we'll want to look at to gauge whether it's more likely to be a successful trade or if it's going to be a little bit more elevated risk. So let's see, going back to where you were mentioning, so I'm not quite bullish yet. I would want to see a daily 2-candle flip to look for a long trade. Now there's one we had previously, if we were looking yesterday and we had this red and green, based on our kind of base parameters, we wouldn't have gotten into the trade and it wouldn't have been a losing one because our rules say to go long above the high. So the next candle fell down. We never got into the trade, which is the good thing about what we'll teach in entry points is finding those points where we look for those longer running moves. That trade was never triggered. We're continuing to move lower. For me, I do want to see more confirmation with a 2-candle flip and then pricing to break above that high point. So we're still moving down. I'd be a little cautious on going long right now until we get some more confirmation with a 2-candle flip. That's just me. And then let me see, going back to, you're on the 15-minute. Yeah, that's the thing. I think when people start, it's going to depend on strategy. I do teach the smaller time frames during the course and entry points for that. It's just going to be a different strategy, not necessarily the 2-candle flip zone per se, but we'll be looking for something else. I'm just not seeing that at this point. What I'm actually seeing is that we have, zoom out on the 15-minute. One thing we'll go over during the 3-day event that helped me is just visualizing impulse and corrections. So as I zoomed out on the 15-minute, notice we had this rally, which was a impulse wave down, and then we had a correction. And we had an impulse, we had a correction. So we're still making lower highs and we're still making lower lows. So if we're looking for the 2-candle flip to go long, I would say maybe shorter lived, that may be good if you want to do kind of more scalping, some quicker trades. But I would say for longer term trades, I'd actually be looking for maybe a 2-candle flip up here, look to go short on a rally and to trade with the trend from the daily time frame, at least until I start to see price break above some of these previous highs. Great question, though. There's a lot of details, and I actually like this setup because it illustrates what we actually are missing from this to make it a higher probability long trade, is that we're missing some of the key information as far as trend is concerned. All right, and I see another comment. Let's see. Hey, Jerry. From your experience, does the 2-candle flip have a better success rate on the larger time frames or the smaller time frames? So the answer is larger time frames. Again, I'm more biased to the daily chart and the higher time frames just because I do like staying in trades longer. I know many students from different trading academies, other trading educations that do like the smaller time frames, like the 15-minute, the 5-minute, the 1-minute. There's a different strategy I'll be teaching for the smaller time frames. The 2-candle flip, as we go down to the smaller time frames, you start to see them everywhere, and it gets a little bit confusing with which 2-candle flips to take and which ones not to. So I'm not going to be really using that for the smaller time frames. I'll kind of stop at 1 hour for the 2-candle flip. As we go down to the under and a 1 hour, if you're looking to trade those, it's going to be a different strategy that we'll look for. But it's all going to make sense and tie together once we can see where those order imbalances occur. Yeah, better success rate, 1 hour time frame and up. If we're going below an hour, there's going to be a different strategy for that based on trend. And actually something else that was on this screen, it's going to be this one down here in yellow. So if you're taking breakout trades, we're going to actually use the fake out breakout strategy to trade the smaller time frames. So the whole point of the flip trade 3-day event is that we have our flip trade 2-candle flip zone, which helps us to participate in those longer running, larger time frame moves. And then as we go down to the smaller time frames, we're going to start looking for the flips based on the fake out breakouts. Typically, that's where I learned, a lot of traders who like the 5-minute, 10-minute, 15-minute, they're trying to take breakout trades and they're getting stopped out. So I wanted to take that and kind of flip the script and say, all right, if breakout trades are failing, how can we use that information to get in as it's breaking out in the direction we actually didn't want it to go? It breaks out and it ends up being a fake out breakout. So a couple of different strategies we'll use. I'm excited to go over all of this with you guys. So yeah, we have a lot to go over during the 3-day event this week. All right, let's continue with the PowerPoint. And love the questions. If you guys have any more questions, this is your time, type them in the chat. It is a smaller group here, so whatever questions you have, definitely feel free to ask me. All right, we've already talked about this one a little bit. So here we're looking at the micro S&P on a 10-minute. Futures market open was here at this candle. And then by the time we got to this candle, the stock market was opened. So there is a significant amount of time that passes between when the futures market opens and the stock market opens. Now, to put that into context, is that if we're waiting till the stock market opened to trade, we just missed this whole move to the upside. I don't know why people say that they don't trade the overnight session. Actually, I do. A lot of students say that it's because there's less volume, there's less activity, so it's more volatile and it's choppier. And I get that, but if you keep that mindset, you're going to be missing so many trades. Just putting that out there. Let me see if I can find that on a, let's see, daily chart. Just going to zoom in on. Let's see. Alrighty. Let's say, let me find a good one. This one's good here. So sticking with Bitcoin, we have a red candle followed by a green candle here. That's our flip zone. And then we had this really big move to the upside. Now the futures market opened here on the green candle. Now there's the chance where when the futures market opens, it's already going to start going. And we know our base rules say to go long above that wick. Now, if by the time the stock market opens at 9:30, if we're trading equity indexes, for example, then the market may have already missed our entry point. Now, the point is that we want to get into trades sooner rather than later till a specific time when we think that the markets are going to be better. Markets are more volatile at 9:30 Eastern, and actually a lot of our higher probability entries occurs right when the futures market opens. I'm gonna find a example using the equity indexes. Let me try micro S&P. Let's see. All right, so actually I know one. Crude oil from a couple weeks back. I remember the day this one was setting up and prepping for it. It was this candle here. Red candle coming down, green candle closing within the range of the red candle. Now notice, based on our general template rules, it says go long above the high wick of the green candle. There's a very teeny tiny wick right there, which says go long right there, getting confirmation that the 2-candle flip is working. Now we opened slightly lower when the futures market opened, but within, I would say, 1 to 2 hours, we started pushing to the upside. By the time it was 9:30 Eastern, the markets had already made a pretty significant move, and we were about up here by the time the market opened, the stock market opened. So I want you to forget about time that you think you should be trading and focus more on the picture on the price charts. That 2-candle flip indicates a potential turning point in the markets. We need to get in sooner rather than waiting for those trade setups so we can get in and stay in trades longer. Versus if you think about it, if you waited till the next day to get in and you're trading here, how much more volatile is it going to be at that point when everyone else is now trading with you? But that's the benefit of trading when the futures market opens and getting in sooner. So there's less volatility once you start getting the move, once the move is already underway, and then a lot of times you're already stuck in the chop by that point. Yeah, Toby said it makes sense to see a daily 2-candle flip to accord with trend. Absolutely. Some people, I feel like they hate the daily trend. I'm going to try to steer you to at least taking a look at it on a day-to-day basis because it does help with the smaller time frame splicing, and that we'll do on the smaller time frames. But it does give you a pretty clear indication of market direction and where we're going to be trading. So if you like trading the 5-minute, 10-minute, 15-minute, and you have a bullish 2-candle flip, then you should be looking for your long trades on the 15-minute, 5-minute, 10-minute, but not necessarily short trades. Or if you have a 2-candle flip to the downside, like this one right here, that's green candle followed by red candle, then for our day trading, again, smaller time frames, you want to stick with looking for your short trades. So that's where the daily chart can give us that perspective of, am I looking for long trades? Am I looking for short trades? And which ones are going to be higher probability? So again, 2-candle flip gives us a sense of direction and locating those turning points in markets. You can see each turning point that we've seen, even the very top back in September, green then red, move to the downside. And then when price stopped here, red then green, move to the upside, move down. It's all about how we read the price charts and building our confidence with understanding why price changes direction. 2-candle flip down here, move to the upside. A couple weeks ago, when was this one? This was December 27th. So almost a month ago, we had this 2-candle flip, move to the downside. So even if you are day trading, going to the smaller time frames, this should at least give you a clue as far as that you want to be looking for your short trades. And then when you find your 2-candle flip long setup, this one was from the 16th, actually the 17th, we had that next wave to the upside. So all about the flips, trading with the trend. And as you can see, we're not looking for zones, we're looking for information that gives us a clue of which direction to trade in. That is extremely helpful, especially on the smaller time frames with our scalping strategies, is that if you are someone who does like the scalping techniques, that you want to be at least putting the momentum, the trade direction in your favor. So 2-candle flip is going to be our foundation for that. So I read Toby's comment. It makes sense to see a daily 2-candle flip to accord with the trend. Yep. Why does the prior 2-candle flip didn't work well for crude oil? Let's see, which one, Jerry? I think I might have missed it. This one or 12-4? Thank you. Or this one from 12-7? 12-4 is up here. This one? Okay, so 2-candle flip. We can see it was a short move to the upside. Granted, it did work out pretty well. When we think about it, if you just trade even the daily chart, and this can be implemented on all time frames, and you say, I'm going to go long above this high and stay till the close of the next candle. Just keeping that sort of idea in mind. The close of the next candle was 71.63. If we're getting in at the high of the, that was that, right? 71. Oh no, wrong candle. I want to use Jerry's example. So this setup here, if we got long above the high, the close of the next candle was 71.21. Say we stayed till the close, we got in above the high of the flip candle, which was 70.48. That's 73 ticks at $10 per tick. 73 ticks times $10 per tick on the crude oil full-size contract. $730 move just on one contract on the daily chart, $730. Not too shabby for that move. But going back to your question, and I do want to answer it, it didn't work too well if you were looking for a longer term, if you're someone who wants to stay in for days or weeks. It's going to boil down to location. So this 2-candle flip formed, but we're still in a downtrend, and we're just kind of bouncing likely off of something over to the left-hand side. This is more of a bounce. The flip will likely work for a little bit, but then once you start running into, or we'll work to identify our opposing zones using the wick over wicks, notice that price rallied after that flip. It rallied up. We had this wick over wick, where we have the 2 red candle wicks crossing. That's where the sellers were coming in and pushing price down. Price rallied right up into that wick over wick area and then fell. So what we'll do is kind of visualize the entire map as far as where we're getting into trades, where our target prices are in order to gauge when we're looking to get out of a trade, and go back and forth between the two. And then that can give us a more comfortable feel as far as, just what's been going on with crude oil up till now, is that we had a 2-candle flip here. That's why price hasn't been able to move higher. And this has actually been, a decent zone if you wanted to take a zone from this 2-candle flip, which has been keeping price down. And then we have this 2-candle flip to the upside, price is holding there. So once we map it out, we can see crude oil has just been stuck within this range between a long trade 2-candle flip and a short trade 2-candle flip. So that again can give us an idea as far as target prices. And when going back to your question, Jerry, why does some 2-candle flips work well and why do some not? There's a couple more things that we'll talk about as far as the location of the 2-candle flips is very key in understanding which ones are longer term versus which ones are shorter term. This one's just not in the right location and it's running into a stack of sellers above, whereas this one, slightly better location that will go into more detail during the 3-day event. Great questions. Let's see, and I see Toby has another question. Your confirmation strategy is helpful. Micro crude oil is downtrending daily, so it seems you wouldn't want to go long, but confirmation confirms. Yeah, exactly, Toby. A couple other things that I'll be bringing in for odds enhancers, so we kind of take the guessing out of it. I want this course to be very objective versus subjective. If you've got that 2-candle flip, just think of it as, the sellers were in control, but then once you get that flip, the buyers are starting to take out the sellers. You want to look for that flip, and that indicates that change of direction. That really is your confirmation, like you said. If we're using that high wick as kind of that point in the sand of that's where the remaining sellers are at pushing price down. Once we break above, that's the confirmation we look for to anticipate the buyers are in control, and we should look for our next wave to the upside. Alrighty, let's see what's next. So we'll be building out a template trade plan as well. So you can see some of the things that we look at that are going to help us keep in line, whether we do trade the larger timeframes or if we do like the more active income trading. Ultimately, having a general trade plan of the same things that we're looking for is going to help us with picking the same trades and being on kind of the higher probability side of those trades. So we'll be building that during the 3-day event. This one talked about trend. So the 2-candle flips can be a good indication of trend. Forming 2-candle flips to the upside, those bullish 2-candle flips can be an indication of an uptrend, versus if you have 2-candle flips to the downside, that can be an indication of more of a downtrend. So we'll be tying in trend to stack the odds in our favor even more and identifying those longer running trades. Again, this is even good for 15-minute time frames, smaller time frames, completely up to you. This chart from a student example, tying in the fake out breakout strategy. This is one of my favorites and foundational ones for the course based on how powerful I've seen it been. A lot of times we're trying to take breakout trades and then it reverses against us. So I've created a strategy in the flip trade event that focuses on when these are more likely to occur, to be a fake out breakout, and how we look to splice into those trades to get in on the reversal move. Notice in this example here, I like his screenshot because we've also got a 2-candle flip right at the origin of that drop. Any questions so far? Keep them coming. All right, so let's keep going through it. In the flip trade, go from this. A lot of charts I've seen give me a headache because there's way too much stuff on it. I have no idea what you guys are looking at because there's way too much information. I want you guys to remove all the Bollinger Bands, the MACD, the moving averages, get rid of them, and just look at price action. We want to simplify the way we're reading the price charts. We need to get rid of the clutter and the noise, like cleaning up the house. We got to get rid of the garbage and just keep to the foundational. Once you can understand how to read a price chart, you're not going to need to go back to seeing all of this kind of confusing indicators and odds enhancers. So keep it simple, just a plain price chart to look for your trade opportunities. No more indicators and oscillators. Big X over that. Complex chart patterns. Some of these, I tried to even learn them back in the day. I never found them extremely helpful. I could see them after the fact, but never really understood why they worked out so long. So again, I'm getting rid of the triple bottoms, the cup and handles, all those things that are kind of more subjective. We're getting rid of those as well. So just price action, keep it simple. I want to see a blank chart and I want to see what you guys are looking at, whether you're looking to go long, whether you're looking to go short. We should all be on the same page with exactly what we're looking for. So I found this helpful as well. 5 steps to becoming a more confident trader. 1, master how to read price action and understand why price changes direction. That's our foundation. Again, once you can strip away all of the complex chart patterns, indicators, and odds enhancers, and you just understand why price goes up, why does price come down, where are those entry points, then you start to build your confidence and consistency with your trading. Have a game plan each day, whether you have a bias to go long or short. So do we have a 2-candle flip? That should give you a sort of key that I'm looking to go long. Do I have a 2-candle flip to the downside? Looking to go short? Either way, having a game plan ahead of time versus, I know a lot of students just kind of jump into their charts and the markets and they start trading without kind of taking the time to understand what's going on and what side of the trades they should be on. Got to do a little bit of prep work, understand, the back testing side as far as where have those high probability trades been in the past, and use that information moving forward to find those key entry points with more confidence. So identify the highest probability trade setups and focus on those. Many charts won't have setups. This is key, and I've been guilty in the past that I'm looking at way too many charts and I'm finding setups on everything or setups that I think are there that actually aren't. So we want to focus on which ones have very specific information, focus on trading those versus spreading ourselves too thin. Have a set risk amount per trade that you're comfortable with and don't change it. This is big too. Don't be moving stops around and taking on more risk per trade than you should be. Don't extend your stop losses. We want to keep our stops tight because we have them in place for a reason, and they should be based on very specific chart patterns as we're going through this course. And then profits, we obviously want to have our trades run for a long time, but ultimately being very strict on risk and letting our winners run. Also stick to only 1 or 2 trading strategies. You'll see how I visualize the price charts during the flip trade 3-day event. And then ultimately sticking to just a few strategies should be your foundation with your trading moving forward. For me, I never wanted to stay in front of a computer during the entire stock market open. Kind of wanted to have a bias ahead of time, trade on my phone and on the go. So I kind of like that method as far as understand the price charts enough where you don't need to be tied to your computer all day. I get it. A lot of people have other jobs. They have, families. They want to have extracurricular activities. A lot of people don't want to stay in front of a computer all day. So you don't need to if you can understand how to read price action. Same page, Toby? All right, so student testimonial from Joy recently. She's also in my coaching sessions. Her testimonial was finally completed 3-to-1 trades in micro gold, micro NASDAQ, and I'm currently in micro S&P. So far, I've locked in over $1,000, my biggest day ever. Feeling thank you, Jesus. Thank you, Kate. Have a great day. This was just from a couple weeks ago. She's making tremendous progress with her trades. And again, just focusing on simplifying how to read the price charts. So let's start to get into the details. The Flip Trade 3-day event does start tomorrow. So keep in mind, it's going to be tomorrow, Tuesday, Wednesday, Thursday from 3 p.m. to 5:30 p.m. Eastern time. Going to be jam-packed 3 days, teaching the 2-candle flip pattern, the fake out breakout, and some other odds enhancers that can help you simplify how you read the price charts. There will be very interactive Q&A, quizzes, examples. I want you guys engaging like you are now, and the questions you're asking. I've learned the best way to learn material is to be engaged. So the more quizzes, the more examples, the better, so that you guys can start to get a feel for what's actually going on in the markets and how and when to participate. I have also included a bonus 1-hour lab. So the following week on Wednesday, we're going to have a lab from 5:30 to 6:30 p.m. Eastern. Now, very important time, and important that as many of you guys try to attend it live, is because we're going to be implementing the lessons during the futures market open. We'll have 30 minutes to prep for the futures market open, kind of see how that trading day ended. Do we have 2-candle flips? Are there other odds enhancers from the 3-day event that we're seeing that can help us prep for which trades we want to be trading once the futures market opens at 6 p.m. Eastern? Then from 6 to 6:30, we can see what's going on in the markets and how we're entering those trades. I want us to be all very specific in what we're looking for as far as price patterns and finding those high probability entry points. So some of the topics covered during the 3-day event, talked about obviously the 2-candle flip zone, which indicates a strong reversal. Also looking for continuation patterns is key. And we're not always going to be reversing up and reversing down, but we need to understand when we're in a reversal phase versus when we're in more of a continuation or even a correction phase. The different phases, once you can be able to visualize them with just understanding price patterns, it'll help you to stay in trades longer. Specific entry points resulting in increased accuracy. So again, entry points need to be very specific. We need to know how to read the charts and know where we're getting in and where we're getting out of trades. So exit points, we have to define our maximum risk ahead of time so we understand if we're comfortable taking the trade or not. There's trades, especially breakout trades, if it's too much risk, I'll pass on it. Doesn't mean I'm just going to completely ignore the chart. Maybe I'm not going to take a breakout trade, but I can splice in with an alternative method. So there's ways, I've been using this term lately, and some people don't know what I mean by splicing in, but it means finding those key entry points by going down in time frame to see, do we have any of those price patterns that we're discussing, the 2-candle flips, fake out breakouts? Do we have those price patterns on the smaller time frames so we can work our way into some positions and go long and go short? That's what I mean by splicing in. Targets based on very specific price patterns. So again, we need to know where we're getting in, where we're getting out, as well as where there may be some obstacles in the way. If we're looking to get long, we need to visualize where there's a stack of sellers above, or if we're looking to take a short trade, we need to be able to visualize where the buyers are camping out at. Learn how to stay in trades longer. Again, 2-candle flip is key if that's at the reversal patterns, the 2-candle flip. Fake out breakouts, learning when these occur. Sometimes breakout trades are great and we look to stay in a breakout. Sometimes it's a fake out breakout. We'll go over the difference between the two, when to expect a breakout versus when to expect a fake out breakout. This one's kind of personal for me because, again, I used to take a lot of breakouts that ended up being fake out breakouts. I didn't understand why, so I wanted to include that as a topic so we know what to look for and when these occur. Wiki areas, kind of one of my own topics that I've helped help traders to find those areas where there's a significant amount of buying or selling in the markets. And then ultimately be able to maneuver the markets when you learn how to read price action. So that's the goal, right? Is we're keeping it simple. We're looking at price charts for what they are. We're not overcomplicating it with too much information, but it's going to take some time to learn these chart patterns. Once you get comfortable with them and you understand why they're forming and where those entries are at, it's going to build your consistency in the long term, whether you're trading stocks, futures, Forex, options. It's going to be helpful in all of that. So again, 3-day event this week. So excited. 23rd, 24th, 25th, 3 p.m. to 5:30 p.m. Eastern. Also have a 1-hour bonus lab, January 31st, 5:30 to 6:30. You'll get all the recordings. A lot of people have signed up already that aren't able to attend live. So what I say, if you can't attend all 3 days, or 1 or 2 of the days, is that you get all the recordings, you get all of the content, all of the supplementary materials. You'll get the trade plan template that we'll create during the 3-day event. And I encourage you, even more so than, of course, if you're in the event, you're going to ask questions, but if you can't attend all 3 days, email me at any time. My email is tradingcoach@katetrades.com. I'm on Twitter, Facebook. I encourage you guys to email me if you can't attend all the days, because I want you to stay on track with the information. I don't want this to just be a course where you take it and then you leave and you're confused after. I really want to kind of work with you guys so that you become confident with the material and you understand how to improve your trading based on the teachings. And then also access to the online community Discord group. All right, so cost of the event for the 3 days, $495. If you are in the live trading with Kate sessions, it's going to be $395. And if you do have someone who wants to sign up as well, you'll get it for the $395 offer. I am doing a raffle too, so if you want to email me to be in the raffle, since the event starts tomorrow, send me an email. I'll be giving one person the event for $195, but shoot me an email if you want to do it. If not, scan the QR code to get registered through the website. And if you qualify for either the live trading discount or if you have a friend who wants to register, let me know. I'm going to post actually, let me share the website and where to access the page. So my website is katetrades.com, KAITTRADES.com. Got a tab at the top for the flip trade. Click on that. You'll see information on the 3-day event, everything that I've covered. To register, click the link on the web page. Again, if you do want to be in the raffle for one person getting it for $195, just shoot me an email. The winner will be announced tomorrow before the session starts. All right, let's see. One more slide. That's about wraps it up. Again, I created this course for you guys based on, the frustrations and the concerns of traders just spending so many years trying to learn how to trade, being frustrated, being confused, learning so many different methods. So this is going to be, a new method to learn, but overall simplifying things, boiling it down to just how to read a price chart, finding those key entry points, and knowing exactly what to look for is going to build your confidence so you can do this long term. Also building that consistency as well. So I'm really excited. Make sure you guys sign up. I'm going to post the link in the chat. And then do you guys have any other questions for me? Questions, comments? Great questions during this session. I'm so glad you guys have been asking them, and as always, encourage you to continue to ask those questions during the 3-day event. And this course isn't for me, it's for you, because I want to make sure that you guys are successful and build your confidence in understanding the price charts versus how you've been learning it up till now. Good to have you here, Toby. Oh, email, yes, let me post that in the chat. Yeah, so if you want to do the raffle, again, in one student for $195. So it's going to be tradingcoach@katetrades.com. The raffle ends tomorrow morning, so the winner will be announced then. email again, tradingcoach@capetrades.com. I posted that in the chat for you guys, the sign up link as well. Thank you, Michael, Greg, Jerry. So good having you all here. Again, any questions, there's my email. Feel free to send me an email if there's something you're struggling with, if you need help with whatever it is. Trading is confusing. It's a hard, field to be in. And, so many people I think are misinformed that it's, a quick and easy way to make a lot of money. So not the case, but I do want to give you some key information of what to look for to build your consistency in the markets. Thank you all so much for coming. If there is no other questions, we'll wrap up today's session. I'll see you guys all tomorrow in the 3-day event. So excited. Get ready. It's going to be an exciting day. A lot of great information. You guys are going to be blown away. And so many students that I've done coaching with and in live trading that have really seen this improve their trading tremendously. So looking forward to having you all there. I'll see you guys all tomorrow in the 3-day event. Again, the link is in the chat. It's also on my website, capetrades.com. Email is tradingcoach@capetrades.com. Thank you guys all for joining. I'll see you all tomorrow during the Flip Trade 3-day event. Have a great day, everyone. Bye-bye.